Quite a surprise here out of the Philippines. What didn't we see?
Yeah, good morning, guys. Yeah, it is indeed a positive surprise. I was seeing a particularly strong private consumption print. So there are some signs that, consumer spending is coming back to life, after being in the doldrums for several quarters. And that's despite, unemployment rates remaining relatively high because of some of these partial lockdowns that are still in place. So that's a bit surprising. And then the other one, I think, is obviously construction and investment spending overall has been pretty strong. We know this, of course, because the government puts a strong priority on construction activity, and they've accepted them in the lockdowns. And so things have continued to progress. And I think that's going to be the case for the rest of the year, maybe ahead of the elections as well.
With the growth bounce back so big, I mean, Asian inflation has remained quite low if you compare to the U.S. and Europe, Euben. Are we likely to see inflation pick up quite substantially in ASEAN, including the Philippines?
Well, it's a mixed bag. In ASEAN, I'd say the countries that have done well on the recovery, particularly Singapore, I think is the one that's going to be facing more inflation pressures, which is why the central bank has already started to normalize FX policy. But the rest, I think, is still very muted. And a lot of it has to do with the fact that fiscal subsidies remain in place. So you've got that in Indonesia, and Malaysia as well. The exception here is the Philippines. So it has been a story of, a weak recovery. And, even with a strong Q3 GDP number, output levels is still 6% below pre-pandemic. So it's some recovery, but not quite as strong as the others. And yet it has inflation that's already well above target for several months now. And I think it's continued to be the case given surging energy prices and the spillovers of that into the rest of the CPI basket. So I think it's a fairly tough environment for policymakers in the Philippines in particular.
What can and should they do then, Euben? Because I mean, consumption, yeah, we're back, but is it one-off? And when you get the sort of inflationary effects coming through, what does 2022 look like for you?
Yeah, so the sustainability of this recovery in Q3, I think, still remains a big question mark for me. Two things, really. One, as we've been saying all along, the fiscal support measures relative to what we see in other neighbors in the Philippines is really pretty low. And, it's going to pick up via infrastructure, but I think still not enough. And then two, I think the vaccination pace has been lagging. So I think as of early November, full vaccination rate is about 26% of the population. And, I think that still makes them vulnerable to a resurgence in cases and maybe a recurrence of further lockdowns, in the months ahead. So I think that's going to be fairly disruptive and, again, makes the outlook a little bit more uncertain compared to the others who have already gotten, 80% of their vaccination rate. So, that seems to be the threshold for them to be able to meaningfully reopen. I think that's not the case for the Philippines, at least in the next, 3 months or so.
But Euben, if you just take the raw numbers and see the recovery as it is in the Philippines, how can you actually also perhaps transpose that onto other ASEAN economies there as well? And can they expect a decent bounce here?
Mm-hmm. Yeah, I would be careful in extrapolating this to the rest of ASEAN because, again, the story is fairly different. Singapore is already back to pre-COVID levels, so that's pretty strong. Indonesia, we got the number last week, quite close, so about 1% below pre-COVID. Philippines, like I said, is minus 6%. The big laggard, I think, will still be Thailand, right? Because for obvious reasons, it's still very dependent on tourism. They've started to reopen their borders. But, if you take into account the quarantine restrictions of home countries of these visitors, when they return, they're still pretty stringent, particularly for China, which is the biggest source for Thailand's tourism sector. So, I think the recovery will still lag far behind the rest of the region for Thailand, and maybe I think slightly better will be the Philippines. But as I said, a bit uncertain still.
How much room is there for any kind of action from these central banks right now in ASEAN, Euben, when you have a Fed and other developed markets that are looking at tightening now?
Yeah, good question. I think not much more room for them to do anything. The most they can do is to give a sort of what we call a sort of enhanced forward guidance to basically tell markets that, look, we're going to keep accommodative policy settings for as long as we can, with the aim of trying really to make the recovery well entrenched. So, even with global financial conditions potentially tightening because of the Fed, I think rate hikes in the region is still some way away. So we're expecting rate hikes in these central banks only in the back end of next year.
Essentially, I mean, they may well follow what the Fed does, but, we have the reduction of bond buying taking place, a possibility that we could see yields moving to the upside. And, of course, the dollar is in play here as well. How does all that play out for these various economies?
Well, weakening currency in the region, thankfully, does not have too much, inflationary pass-through before. So this is why, the contribution on inflation in terms of overall policymaking is kind of less of an issue at the moment, maybe with the exception of the Philippines. But yeah, again, if, for example, energy prices keep going higher, I think that will be an issue for some countries, especially the laggards, Philippines and Thailand, because they're very dependent on, coal and LNG imports. And there's no room for subsidies, or they're not doing too much of the subsidies as much as we're seeing in the other countries. So inflation could still be an issue, and that could be reinforced by, a stronger dollar, i.e. weak currencies for these countries. And then that might force the central banks to sound a bit more hawkish. But again, we don't expect it to happen in the near term. It's probably, they can afford to be patient at this stage, I would say.
Okay, a final one on those two laggards that you point out, Thailand and the Philippines, obviously, with the GDP numbers out. Give us a sense of when you think the labor markets in each of those countries manages to recover to pre-pandemic levels.
I think it's going to be a while. So I think the labor markets in these countries are still adjusting lower in the sense that, jobs are not still being created. In fact, there's still some losses, and labor markets don't rebound as quickly as how you see it in the headline numbers, right? Just because of some frictions, especially in these countries. So I don't expect really employment to come back in a strong way until we see growth coming back to trend, pre-pandemic. So in Thailand's case, maybe 4.5. Philippines was running 6.5. So, we're still far from that. And until that happens, labor market pressures will still be pretty much on the downside.